In today's short video, I just feel so eager and the necessity to talk about FANG stock. FANG has been moving the NASDAQ index, US stock market, as well as the global economy all along with extra momentum in recent years. Well, let's try to find the best one from these super giants that have been proven to succeed and weather through all type of economic cycle and market condition. What is going on, guys? Thanks for your time and watching. This is Barro, aka Investmentor. In today's short video, I just feel so eager and the necessity to talk about FANG stock. FANG has been moving the NASDAQ index, US stock market, as well as the global economy all along with extra momentum in recent years. During the COVID-19 pandemic, once again proving their super robust and valuable business models for us to trade and invest. In today's short video, let's try to find the best one from these super giants that have been proven to succeed and weather through all type of economic cycle and market condition. After all, they could be truly valuable and stable for us to trade and invest in the second half of 2021 and going forward. Okay, so everyone should be quite familiar with FANG, which is the abbreviation of the US tech giant Facebook, Apple, Amazon, Netflix, and Google. The 5 super tech giants have been leading the NASDAQ index and US stock market and strongly connecting and influencing all of the other industries, sectors, and companies around the globe. There are just tons of publicly available information about their histories, profiles, progresses, and future outlooks. Let's try to find some precise and concise insights from the FANG stocks in the short video today. And why Google and Amazon could be really awesome target for us to invest in second half of 2021 and going forward. Let's just go through FANG stocks one by one here, okay? The first one, Amazon, with the ticker AMZN. Amazon went IPO in 1997 at the price of around $1.3 and then surged to above $100 sometime before the crisis in 2000 and 2008. After some up and down, Amazon succeeded and weathered to surge further up above 700 price level in 2016. And then, all the major tech innovations and breakthroughs in big data, cloud computation, artificial intelligence, auto vehicle, Internet of Things, and so on have been making a smooth sailing for Amazon stock price all the way up to current level at around $3,700. From the COVID-19 low in March 2020, Amazon stock price has been growing for another 130% through the COVID-19 pandemic. Once again, proving its business model strong enough to survive almost all type of economic cycle and market condition in the past 2 decades. By the historical chart during US and China trade war between October 2018 and 2020 and the COVID-19 spreading between 2020 and 2021, there were 2 periods of beautiful consolidation which were great for range trading strategy out there. On many investment research sites, almost 99% of Wall Street analysts are rating to buy and no one is rating to sell Amazon. With 12 months forecasting upside potential up to $5,500, the current price is just around $3,700. It's even lower than the forecasting average around $4,300. Obviously, Amazon is the one with the greatest potential in both trading and investment. The technical pattern looks fantastic to do some easy and simple trading setup for really sweet risk and return potential. The potential profit taking point can be super sweet and yummy if you buy Amazon now with short-term stop loss or support buffer between $3,555 and $3,499. But you can always adjust on that. Please calm down though. Before you place the order to buy, consider a trading setup for stop loss and profit taking, as well as support and resistance levels is always the key. On the other hand, the fundamental always looks super promising based on some facts below. First, Amazon has super strong competitive advantages and business modes with relentless innovation into more profitable business models that are valuable to human beings. Second, the core business has a low penetration rate with only 20% of overall US e-commerce market right now, unlike the 7 to 80% of that in Hong Kong, Korea, and some of the other countries, suggesting big room to grow in the US for Amazon. Third, Amazon has only about 30% revenue generated from global market right now, with 70% of that from the US market right now, implying great potential for its global expansion. Therefore, other than short-term trading, Amazon is definitely great to nibble to buy step by step, at least in the next 1 to 3 years. In most recent live streams and short videos, I have mentioned that Warren Buffett and many other financial gurus traditionally consider long-term investment over 5 to 10 years. But in the past 10 years, the world has been changing too much and too fast to make me think that 1 to 3 years has become long enough to turn everything around. That's why I like to use 1 to 3 years for mid to long-term investment. And then Google, with the ticker GOOG. Google went IPO in 2007 at a price around $221 after 2008 financial crisis. Google's stock price has also been on a smooth sailing all the way up to recent high at around $2,770 right now. Google's stock price has been growing over 175% since the COVID-19 low in March 2020, proving its robust business model as well. Other than its already super strong competitive advantages, Google has also been relentless for market expansion and tech innovation into more trending fields like big data, artificial intelligence, cloud computation, and all the related hardware and software devices. On tiprank.com and the other investment research tools, also over 99% of the Wall Street analysts are rating to buy, and no one is going to sell Google. However, the 12 months forecasting upside and downside potential of Google does not show a sweet risk multiple for short-term trading. By the technical and fundamental factors of Google, it's another great target for mid to long-term investment instead of short-term trading though. By the historical chart here, Google has been on a really smooth upward trend, so there's no point to go in and out for the short-term trading here. Short-term trading is usually with more advantages during volatile or consolidating period. To this point, Amazon and Google are just really great for me to invest a fixed percentage of monthly salary in the next 1 to 3. And they're also great shelters for portfolio rebalancing and risk hedging to park capital from gambling type of assets from time to time, especially during current market condition, all the uncertainty popping on and off. Of course, this is just my 2 cents based on my personal experience and what I have been aware of what those global institutional investors have been doing. Please don't hesitate to feel free to leave any of your thoughts and comments for further discussion too. I'm more than happy to embrace. As for the other 3, Facebook, Apple, and Netflix, they have been great and strong too, but they are somehow facing issues like a fierce competition or stagnant innovation and so on. Therefore, the overall analyst rating is not as strong and beautiful as that of Amazon and Google. Also, the 12 months forecasting upside and downside potential don't provide a sweet profit-taking and risk and return potential out there. With all the easy and simple look, for now, I'm going for Amazon and Google only out of all the FANG stocks. What's your thoughts and strategy? please also feel free to comment for further discussion. And I hope this is helpful for your trading and investment as always. I will try my best to research and come up with more in the next one. See you.